You guys doing? I hope you're doing wonderful. I hope you're doing fine. How's it going? This is a video about the market brief. I want to discuss my bearish structure in the Dow Industrial and how I came up with this bearishness. And it's not because I am envious. It's not because I want to be different. Good deal. And if you are a new investor and frustrated that a lot of people can't call the market, well, no one can, but we can see the bearishness and we could go all cash, because if you stick to this rule, you'll be safe for a very, very long time, and you will trade for a long time, and you'll be more less emotional, more technical. Good deal. This is the equity put to call, and I discussed the importance of the positive divergence between the price action and the momentum indicators such as the stochastic. Good deal. Beautiful. So what's positive about the put to call? As a consequence, what's negative for the market? Okay. Now we went up almost 25% to the put to call. We reached this ratio, which is half and half now, half of bulls and half of bears. The sudden move of the sentiments. This is what I always talk about. This produces retracements most of the times, at least 90% of the times historically. So positive divergence. Now the momentum is really great, almost 75 for the stochastic, which indicates a bigger momentum for the put to call, which means bearishness. A bullish crossover in the MACD, and we can see what happened in the past and how reliable that is. So this one a little bitty one, but this one is a bigger. So okay, good deal. Beautiful. So if you're watching this illustration, you will find out that I am not just trying to be against the crowd. So it's very obvious. Good deal. And once you have this bullish crossover between the 10, 20, and a 50, 20 in the red, 50 in the 20 in the blue, 50 in the red, most of the times bad things happen, and I called it the disco signal. See, every time it happens, something bad happens, okay, and vice versa. Good deal. So this is the put to call. Let's talk about King Dollar. I tweeted and I uploaded videos about the places where the buyers gather. This is two ABCs. The first one, the green one, and it reached 90.65, which is 1-to-1, and the low was 90.47. So it met the target. The blue one met the target exactly at 162, 90.51. Fibonacci extension 162, 90.51. So this is a places of buyers, which means support. This is another thing I find. Usually after a breakout or breakdown, a 162 Fibonacci extension provide volatility. So we have an exact 162 Fibonacci extension right here from this breakdown. And the volatility it's starting now with the basic. Once we clear the 10-day moving average, I think we're going to have a fast move like this one. Right here. See, break it, fast. And we will have, most likely, I really don't know the future, we will have a 162 Fibonacci extension of this trading range. Will take us to here. Also, the stochastic is over 20. This one is not correct, but it's over 20 now. And a lot of times, the second dip, when it comes over 20, a lot of good things happen. Same is true with the RSI. So you come out of oversold right here, you test it, and you're going back up. You're hooking up. Good deal. So I hope you understand this logic. Weekly time frame, another beautiful thing we have. A places of buyers, which is an older price memory, an old box too, if you believe in these boxes that provided support. Also, a beautiful positive divergence that doesn't happen all the time, and you can pause the video and see the effect of positive or negative divergences on the USD in a weekly time frame. In addition to that, we have a bullish harami in the Japanese candles, and we're going inside now the Bollinger Band, which indicates a mean reversion to the 20 period moving average, which go hand in hand with the 162 Fibonacci extension breaking out of this box. So we gather evidence, as I said before, of possible targets, possible support. Good deal. So you could rewind and watch this video again if you want to. So now we go to the guest of honor, the Dow Industrial, and you could pause and look at this too. Okay, 100% of the times it happened in the past. Whenever you have all these, I'm talking in the past 6 months, or 7 months, whenever you have these conditions, hand in hand. Okay, so what are they? Okay, first you have a bearish wedge. Maybe I should do it here. Oh crap! Let's go back. Sorry, man. I'm sorry. Good deal. So a bearish wedge right here. All right, and it's breaking down from the bearish wedge, and we have a bearish divergence, which is longer in duration, and it's like the same rule with coming out of oversold. You went down from, and the stochastic from an overbought, which usually the second dips produces momentum to the downside. 1, 2. This one is 1. Good deal. So bearish divergence right here, longer duration, breakdown in the bearish wedge. Good deal. A very reliable MACD bearish crossover, and the histogram is going below 0. And every time these things happen in the past, it produces retracements. It happened here, September. See, the stars were aligning like this one, and boom. Okay, good deal. This one was a brief one. It was an equal divergence and bearish. This one was fast and furious. Didn't even wait for the divergence. And this one, and all of them at least 1,000 points. Ooh, good deal. So it's not because I'm dark. It's not because I don't know. I'm stupid because I'm not taking advantage of the beautiful stocks and all that nonsense. The only bullish thing about this picture here is closing above the 10-day moving average. But this is a hanging man. This candle came in the wrong place. These two. So we have 1, 2, 3. Almost a lot of candles, a lot of bearish candles here. And if you think about it too, you really, it's like a head fake in the all-time high right here. So there's no follow through in the all-time high. So the only thing is the 10-day moving average, which I really don't take it seriously because it's flattening right now. See, after it flats, it's no longer very reliable support. You know, it's really reliable when it's sloping up. Flat is not really reliable. Not reliable. Good deal. So I hope I could have expressed my views, and I wish you guys all the best. I want you to be careful and not to be very bullish, and less ego is more, and more thinking. Please, you don't know the future. A lot of portfolio managers now are trying to close the year. That's why they're buying the market. Well, once they stop buying the market, these things will take place, and there is no sell signal now except the breakdown of the bearish wedge. But to close below the flattening 10-day moving average is a sell signal for me. I wish you guys the very best. Please subscribe if this is your first time, like if you like, and share. And please do love disco. And do remember that disco is forever.